All right, crypto fam, buckle up. The market is absolutely electric today, and if you thought things were moving fast before, you haven't seen anything yet. We've got a tidal wave of news hitting us from all angles, and you need to be in the know. Get ready, because Bitcoin Bulletin is diving deep into the stories shaping our digital future, right now. First up, we're seeing a massive divergence in ETF flows, with one major player soaring while another faces a significant downturn. This is a crucial snapshot of where institutional money is moving. Next, get this. A major exchange is boldly blurring the lines between the crypto world and traditional finance with a brand new hybrid index. This innovative product could be a game changer, merging familiar tech giants with digital assets. We've got all the details on what this means for your portfolio. And the momentum doesn't stop there. We're breaking down the latest analysis on Bitcoin's September forecast, but the real buzz is around specific altcoins that analysts are calling up only. Find out which projects are defying the trend and making major moves. Finally, we're diving into a strategic expansion that signals a major institutional play in a key digital asset sector. This move could have significant ripple effects across the market. Stay locked in, hit that subscribe button, ring that notification bell, and let's get into it. Bitcoin ETFs surge as Ethereum sees outflows. This is a critical moment in the digital asset ETF landscape, as Bitcoin spot ETFs are experiencing a massive influx of capital, while Ethereum spot ETFs are facing significant outflows, signaling a clear shift in investor sentiment. Yesterday marked a pivotal day where U.S. crypto spot ETFs saw Bitcoin products gain a staggering $3.32 billion, dramatically contrasting with Ethereum products, which recorded a net outflow of $1.353 billion. This divergence is a stark indicator of where institutional and retail investors are placing their bets in the current market climate. Delving deeper into the specifics, Fidelity's FBTC and BlackRock's IBIT were the frontrunners for Bitcoin inflows. Fidelity's ETF alone saw a $133 million inflow, pushing its cumulative total to an impressive $11.885 billion. BlackRock's iShares Bitcoin Trust, IBIT, also continued its strong performance, adding $72.86 million in a single day and bringing its total cumulative inflow to a substantial $58.38 billion. These figures underscore the immense demand for direct Bitcoin exposure through regulated investment vehicles. The overall net asset value for Bitcoin ETFs reached $143.208 billion, representing a significant portion of Bitcoin's market cap. This robust inflow into Bitcoin ETFs comes after a period of consistent gains, although August saw a slight reversal with total outflows reaching $751.1 million, a notable change from the preceding month's strong performance. Analysts attribute this recent outflow to profit-taking strategies following a strong summer rally and a natural market correction. However, the cumulative inflow since the ETF's inception remains exceptionally high at $54.574 billion, demonstrating sustained institutional confidence. In stark contrast, the Ethereum ETFs experienced a significant reversal. After a 5-day streak of inflows that added over $1.5 billion to the asset class, yesterday's $1.353 billion outflow was a substantial blow. The Fidelity Wise Origin Ethereum Fund, FETH, and Grayscale's ETHW were particularly affected, with outflows of $51 million and $61 million, respectively. Grayscale's ETHE also saw a $28.6 million outflow. This sharp downturn suggests a waning investor appetite for Ethereum ETFs, with Bitcoin ETFs now capturing the majority of the market's attention. The performance of these ETFs directly reflects the evolving investor behavior in the digital asset space. Bitcoin continues to solidify its position as the preferred institutional asset, attracting a larger share of capital compared to Ethereum. This trend aligns with historical market patterns, where Bitcoin often leads in capital inflows and price performance, especially during periods of market adjustment. The data clearly shows that, while both assets are significant, investor preference is currently leaning heavily towards Bitcoin through these new ETF products. Market watchers are closely observing these trends, with many analysts pointing to Bitcoin's established dominance and its role as a digital store of value as key drivers for its sustained inflows. The ability of Bitcoin ETFs to consistently attract capital, even amidst broader market fluctuations, highlights their growing importance in the mainstream financial ecosystem. But this isn't the only major financial shift we're tracking. Hold on to your hats, because next, we're talking about a seismic move by a major exchange that's blending Wall Street with Web3. Coinbase unveils hybrid index futures, merging tech stocks and crypto ETFs. In a move set to redefine investment strategies, Coinbase is launching a novel futures product that strategically merges the performance of the Magnificent Seven tech stocks with the burgeoning world of cryptocurrency ETFs. This groundbreaking offering, slated for debut on September 22, is named the Mag 7 Plus Crypto Equity Index Futures. It will feature an equal-weighted index comprising Apple, Microsoft, Nvidia, Google, Amazon, Meta, and Tesla, alongside Coinbase's own stock and the highly sought-after Bitcoin and Ethereum ETFs from BlackRock. This innovative structure ensures that each asset class, from established tech giants to leading digital currencies, carries equal weight, providing a balanced exposure to both traditional and digital asset markets. The index's foundation is built upon BlackRock's iShares Bitcoin Trust and iShares Ethereum Trust ETFs, which have garnered billions in investor capital since their U.S. launch. By integrating these prominent crypto ETFs with the performance of the top-performing tech equities, Coinbase is forging a unique financial instrument that mirrors the increasing convergence of the crypto and traditional financial sectors. This initiative is a core component of Coinbase's aggressive strategy to expand its derivatives business, further bolstered by its recent $2.9 billion acquisition of Deribit, a leading options exchange, signaling a clear intent to dominate the derivatives market. Crucially, this new futures product will not be immediately accessible on Coinbase's retail trading platform. Instead, the exchange plans a phased rollout through partnerships with select platforms, a move designed to ensure stringent regulatory compliance and operational readiness. This approach aligns with a broader industry trend where crypto exchanges are increasingly venturing into regulated futures markets, particularly within the United States, where regulatory ambiguity has historically posed challenges. Competitors like Kraken have also been expanding their derivatives offerings, acquiring entities like NinjaTrader and the QCX Derivatives Exchange to bolster their presence in this space. Industry analysts are keenly observing this development, anticipating that such products could significantly blur the established boundaries between conventional financial markets and the cryptocurrency ecosystem. The Magnificent Seven stocks have historically been major drivers of the S&P 500's performance, and their inclusion alongside crypto assets in a futures index offers investors a sophisticated new avenue for hedging and speculation on macroeconomic trends. However, recent market corrections in some of these tech giants also raise important questions about the index's potential volatility and performance during periods of tech sector downturns. The strategic timing of this launch is also noteworthy. Amidst evolving legal and economic landscapes, including shifts in tariff policies and ongoing discussions surrounding Federal Reserve monetary policy, investors are actively seeking diversified investment tools that offer exposure to high-growth potential assets. Coinbase's Mag 7 plus Crypto Equity Index Futures presents a compelling proposition for market participants navigating this complex and dynamic environment, potentially offering a unique blend of stability from tech stocks and growth from digital assets. And the market insights keep coming. We're not just looking at institutional plays and new financial products, we're also diving into the altcoin action that's making waves. Stick around as we break down which altcoins are defying gravity. Analysts spotlight Solana and Layer Brett amidst Bitcoin's September outlook. As September unfolds, market analysts are painting a divided picture for Bitcoin's trajectory, while a strong consensus is emerging around significant momentum in specific altcoin sectors. Despite fluctuations in Bitcoin's dominance, two projects, Solana and Layer Brett, are distinguished by their remarkable ability to maintain upward momentum, irrespective of broader market movements or Bitcoin's price action. This independent strength highlights a maturing crypto market where fundamentally sound projects are increasingly charting their own course, offering diversification opportunities beyond Bitcoin's influence. While Bitcoin remains the dominant force in market capitalization and institutional interest, its sheer size now caps its potential for exponential percentage gains seen in earlier cycles. The era of 100x returns for Bitcoin is largely considered over due to market maturation. This doesn't diminish Bitcoin's importance as a store of value, but it underscores the necessity for investors to adopt diversified strategies. A balanced approach involves maintaining exposure to Bitcoin for stability, while strategically allocating capital to high-potential altcoins for amplified growth. Solana has consistently demonstrated exceptional resilience and technical improvement, particularly in its network's transaction speeds and reliability during periods of high demand. These enhancements have addressed previous concerns about network stability, providing a solid foundation for continued positive momentum that is less correlated with Bitcoin's performance. The expanding Solana ecosystem, encompassing DeFi, NFTs, and consumer applications, creates multiple growth drivers independent of speculative price movements, supporting sustainable value appreciation. Layer Brett is carving out a unique niche by offering microcap growth potential coupled with the robust security of Ethereum. Operating on a Layer 2 foundation, it promises instant transactions and minimal fees, all while inheriting Ethereum's full security guarantees. This combination of high performance and unwavering reliability is particularly attractive to users seeking practical, efficient blockchain solutions. The project's presale structure presents an opportunity for early investors to gain positions before potential exchange listings and wider market recognition, often leading to superior returns compared to investing in more established tokens at higher valuations. Technologically, Bitcoin serves primarily as a store of value, offering limited utility beyond its digital gold narrative. Solana provides impressive performance but has faced past reliability challenges. Layer Brett, however, achieves an optimal balance by integrating Layer 2 scalability with Ethereum's renowned security, making it ideal for widespread practical adoption. The growing demand for solutions that offer both speed and security is a significant driver for Layer Brett's potential. The traditional correlation between Bitcoin's price movements and altcoin performance is visibly weakening, especially for projects like Solana and Layer Brett that are driven by their own technological advancements and organic adoption. This decoupling is a positive development for portfolio diversification, allowing investors to mitigate risks associated with over-reliance on a single asset's performance. Analysts recommend a multi-layered investment approach, maintaining Bitcoin exposure for stability, allocating to Solana for growth with manageable risk, and investing in Layer Brett for significant upside potential through its microcap status. This strategy aims to capture diverse market opportunities while balancing risk and reward. We've covered the institutional shifts and the altcoin breakouts, but there's still one more major strategic move making headlines. Get ready for a deep dive into a high-conviction play that signals major institutional interest. Cango announces major strategic expansion into Bitcoin mining. Cango Inc., a prominent automotive distributor in China, has declared a significant strategic expansion into Bitcoin mining, marking a substantial pivot towards institutional-grade digital asset investments. This move represents a high-conviction play by the company, signaling a strong belief in the long-term value and potential of Bitcoin mining as a core business. Cango's entry into this sector is not merely a diversification tactic, but a deliberate step to leverage its operational expertise and financial resources in a rapidly growing, albeit volatile, market. The company's strategic decision to invest heavily in Bitcoin mining infrastructure underscores a broader trend of traditional companies exploring the digital asset space. Cango aims to establish a robust and efficient mining operation, potentially integrating advanced technologies to optimize energy consumption and operational costs. This focus on institutional-grade operations suggests a commitment to long-term sustainability and profitability within the competitive Bitcoin mining landscape. The announcement has generated considerable interest, positioning Cango as a notable player in the institutional mining sector. Cango's expansion into Bitcoin mining is underpinned by a detailed strategic plan that likely involves securing significant computing power and establishing favorable energy arrangements. Given the capital-intensive nature of Bitcoin mining, Cango's financial backing and established corporate structure are key advantages. The company is expected to focus on acquiring state-of-the-art mining hardware and optimizing its operational efficiency to maximize returns. Furthermore, its strategic location and potential access to cost-effective energy sources could provide a competitive edge in the global mining market. The move into Bitcoin mining is seen by many as a bold diversification strategy, allowing Cango to tap into a new revenue stream that is largely uncorrelated with its traditional automotive distribution business. This diversification could offer significant upside potential, especially in a market environment where Bitcoin's value proposition as a digital store of value continues to gain traction among institutional investors. The company's management appears confident that this strategic expansion will create substantial shareholder value and enhance its overall market position. Analysts view Cango's decision as a testament to the increasing institutional acceptance and integration of cryptocurrencies into mainstream finance. By venturing into Bitcoin mining, Cango is not only diversifying its business, but also positioning itself at the forefront of the digital asset revolution. The success of this venture will depend on various factors, including Bitcoin's price performance, mining difficulty adjustments, regulatory developments, and Cango's ability to manage operational costs effectively. However, the company's proactive approach and strategic investments suggest a well-thought-out plan to navigate these challenges and capitalize on the opportunities presented by the burgeoning Bitcoin mining industry. And that wraps up our deep dives for today. We've covered a lot of ground, from ETF flows to hybrid indices and altcoin surges. Now, let's hit you with a rapid-fire recap of all the top stories. All right, that's a wrap on today's market-moving news. We saw Bitcoin ETFs attracting massive inflows while Ethereum ETFs faced outflows, Coinbase launching a game-changing hybrid index, analysts calling Solana and Layer Brett up only, and Cango making a bold move into Bitcoin mining. Don't miss out on any of the action. Make sure you're subscribed, hit that notification bell, smash that like button, and follow us on all our social channels so you're always in the loop. We'll see you in the next one.